Another episode, No BS Wealth. Today we're talking about no bullshit about real estate investing. As many of you know, I personally have invested in real estate before. We talk a lot about it, and a lot of you listeners anyway want to invest in real estate. So today we've got one of our gurus on with Terrie Schauer to go through real estate investing. I'm sure we could probably speak on this for 4, 5, 6 hours. We will hold it to 30 minutes, listeners, but if you guys love her, we'll have her back on. So without further ado, Terrie, why don't you give us a little background about you and then answer the question of why the hell did you get into real estate?
Yeah. I actually kind of got into real estate by accident. I'm in Montreal, Canada, and I moved away to go to college, I guess, like, any American would, except that I went to Toronto, which is about 600 kilometers away, 400 miles from my hometown. And there was no space left in the student housing. So I ended up moving into this like crazy big disorganized co-op house, which was like all students, and like there was garbage piling up. It was like really a disaster. And so like I was 19, I moved out of my parents' house and then ended up managing this house the next day because my housemates like felt the property manager and voted me manager. And so then I spent the next 2 years like basically organizing everybody and making sure that the trash got taken out. The toilets were stocked with toilet paper, all that kind of sexy stuff. But it was actually like really a great experience because like I had no real power. And so it meant that with just purely management and shaming, I had to get people to kind of, do what they needed to do. And then I liked that so much that when I then changed cities, because I kept studying, I moved to Vancouver. And then I just set up a house hack. And this was like 20 years ago before house hacking was even a thing.
Cool. Yeah.
Yeah, before it was even a thing. It didn't have a name. It was just like you rented a house and rented out the rooms.
Right.
And so I did that. And then when I moved back home to Montreal, I went to see my dad and I'm like, Dad, look, I've been doing this for 4 years. Like, would you lend me a down payment and let's go buy a house? So in Montreal, we don't actually have really single family homes. We have like triplexes. So we went to the worst part of the city and I bought a triplex there, moved into one of the floors, and then proceeded to turn the other units like into similar like student housing, which I kind of rented by the room. Again, house hacking before house hacking was a thing. And then that went so well that I bought a second house and a third house. And then we ran out of borrowing capacity because like in the States, we have this like line between residential and commercial. And like it actually took me 10 years to grow from there and crack that commercial investing thing. But in the interim, what I did is I built a property management business because I knew I had a good business model. It was a crappy area. And I knew that by like renting out those rooms to students, there was a demand for foreign students coming in who wanted a furnished room. And I like created this kind of community where like at one point I had like, my assistant was going to get them on a scooter and like we'd pick them up from the airport and move them in and organize a welcome party. Like it was like a whole, not like a frat house kind of thing, but it was like a whole thing.
Yeah.
So like I built this empire up to like 60 rooms. And then I ran that for a while. And then after that, like I kind of, I grew up a little bit. I was like, okay, I've had enough of this and it doesn't scale super well. And I'm sick of like mediating everybody's fights. And then it turned into like an actual real property management company. And then after that, I kind of started getting into networking. And actually, I got approached to teach property management for a local coaching organization. And personally, I only owned 9 doors. I had managed thousands of units, but I had only ever owned 9, right? And so like I was a little bit imposter syndrome, but by hanging out in this community of investors, I then figured out the multifamily game. And so like that's what I've been doing for the last, I guess, 6 or 7 years. And then I actually started my own real estate coaching business now. So that's the kind of long-winded answer to your question.
The like medium-winded answer? No, I love it. It was great background. So talk us through, just go through quick basics of real estate investing, and then we'll kind of riff off of that.
Okay, quick basics. So basically you decide to do it. Either you save up some money or you find somebody who has some money or you find some creative way to go and, either do like vendor financing or find some kind of creative way. But typically it's that either you save up a down payment or else you have a friend or a family member who does. And like, I like to tell the story about me going to see dad because I think a lot of people initially are a bit embarrassed. Like I was certainly embarrassed. And like for the first 10 years of my career, you think I told anybody that it was my dad who lent me the down payment money? Like, no. But I think like realistically, especially today in urban centers where, prices are getting quite high, it's really difficult if you don't have either a family member or some close family friend who has down payment, or if you don't have that money, that can be a bit of an obstacle. And then really it's a question of getting to know a market. And I think this is where a lot of people get into analysis paralysis. So like, let's say step one is get access to capital and then get some financing. And that's like super simple, like just call up your local bank or else go see a mortgage broker. And like, again, this is a place where people get scared and they are worried of being taken advantage of, or they're embarrassed about their financial situation. And so they just don't make that call. And like, if I think of the mortgage brokers that I work with for my clients and for myself, like there's no shame in that. And like, they are actually a financial planner who will tell you because they want your money, right? Like they want to make commission off your business. And so they're going to be like, okay, you need to fix your credit. You need to declare this much more income. You need to do this specific thing to be in a position to be financeable. And then if you're not in that position today, you can figure out, what do I have to do to work backwards to get there? So like I would suggest, delegate that responsibility to the mortgage financing person, because when you like metaphorically drop your drawers, they're going to be able to give you all the information you need to put yourself in a position to be, finance worthy. And then the next challenge is to get to know a market. And like very, very quickly, all you need is a pair of running shoes or a bike, and you need access to the MLS, right? And so like a market shouldn't be huge. It should be a big enough area for you to be able to jog around it or to bike around it and like really feel the neighborhood. And then you got to crunch deals. And like by the time you've crunched 20 scenarios there, you're going to be able to see like on the MLS when something pops up, does this look interesting or does it not look interesting? And do the numbers even make any sense? And like, I really don't think it's any more complicated than that. Like, I think people like to overcomplicate stuff and it's scary, like I was 26 and I signed this, $325,000 mortgage with more money than I thought I could make in 10 years. And like that's really scary. But like the actual fundamentals of it are not that complicated.
I want to jump into there. I have a ton of different ways I want to go with this, but the fear factor, right? People are usually scared of a big loan number or something. I want to attack that a little bit differently and more, I guess, positively spin of what that debt is. I say this all the time. Debt equals leverage, right? There is bad debt, there is good debt. Having an asset like a property is a good debt. That means you're just leveraging the bank's money to buy something. People usually, if they're not in this game as much, think that $325,000 home, I'm in debt $325,000. It's like, no, there's a value to that home. Like worst case scenario, you can go ahead and turn around and sell that. You're not out $320,000. And I think that's the biggest hurdle for most people is, oh, I'm going to be in debt X amount of dollars all the time, because they don't understand how the leveraging works or really the value of the property. How do you help clients or consult or talk to people about that fear and overcoming, the fear of having debt, if you will?
Yeah. Yeah. So, I mean, like, look, to speak directly to that fear, that specific fear is like, I always frame in terms of tenants, right? Because it's like, it's just a business venture. And like, when I counsel people, I'm like, you need to buy cash flow neutral. Like at the very worst, the building needs to not be setting you back anything. And then all you have to do is keep it rented. And like, rents are super price sensitive. And so sometimes you drop by $50, and that's the difference between having 10 calls and having none. So, worst case, you just reduce your rent a little bit and then you take a small hit, but it's not existential. And I think when people are sitting there at the beginning, they have this existential fear that they're going to get wiped out by, bad weather, a roof falling in, a plumbing explosion, a tenant burning the place down. But like, look, there's insurance. Your insurance has lawyers. As long as you hire licensed contractors, as long as you do things the way you're supposed to do them. Like I've not seen, very many existential things happen in my 20-year career. And then, that brings me to, I guess, like a more macro question on fear. And, I think us as humans, like we misunderstand fear in a way, right? Like we think that it's an impulse that is telling us to either fight or flight. Like that's what the fear reaction is. It's like either you want to run away, so you end up in analysis paralysis and you don't make any moves. And then in real estate, it's a bit less common to get into fight mode. Like the most common thing I see is like people go doe in the headlights and they just do nothing. And so it's like to really understand how fear functions. And I like to use the analogy of like a dashboard light, right? Like fear is there to protect you. It's there to serve a purpose, but it is that dashboard light. And my husband's a mechanic. Like we have this joke all the time. His car dashboard looks like a Christmas tree. Like all the lights are on, and he's like, that one doesn't mean anything, and that one doesn't mean anything, and that's fine. Whereas like for me, I get like a flicker on the dashboard. I'm like, I'm gonna pull over, the car's gonna explode. So like in real estate, like the point is to be able to understand that like that fear alarm going off in your head is just that. It's a dashboard light. And so, take note of it. If you need to, account for some risk, like maybe you need to account for some risk, but it's not a message from God telling you that there's a tiger about to eat you for lunch. So like, yeah.
So when it comes to real estate investing, really there's three main component or three ways to, not ways to invest, three investments themselves: single family, multifamily, and commercial. Commercial can have industrial and all those things. And usually isn't the first step you're going to make is commercial. Okay, let's be real, everybody. Love ya. I know you want to get into it. Commercial is probably not going to be the first jump you make. If you do have that money, then more power to you. Talk us through someone new, because there's a lot of people listening, and I'm sure you deal with them all the time, is they just want to get in the game and get started. Typically, they come to me after they've already had a home or two, and I'm usually trying to fix it and then organize it to make it a profitable business. But what would you say to someone who's like, hey, I want to get into it? Where do I start? How do I start? Is it single family? Is it multifamily? What's kind of your opinion?
Yeah. So, I mean, like, I get this question all the time with, my students, right? And so, like, us in Montreal, you got to think of, we're a bit like California, right? So, like, our barrier to entry, our prices are super high. And so, like, it's difficult even to get, and we don't have single family homes. We would have condos. That's our equivalent, right? But even to get into something like that has a very big price tag attached to it. I don't think that it's necessarily any more complicated than what I said a little while back, which is that it's a question of understanding the market, getting financing and getting access to capital. And then like realistically, probably you're going to do a couple of like smaller residential projects before you get into multifamily, like for two reasons. Like first reason being just the amount of money you need to sit at that table. And like, I'm not familiar exactly what kind of programs there are in the US, but like in Canada, we have all sorts of programs that are designed to help people buy their first property, buy their first home, maybe buy a duplex. And so like there are these, gradual steps. And then typically what people do is they'll buy that, they'll run it for a year or two, grow the equity, and then they have some interesting money to play with if they've made a good move. But typically it's really, most people start with that, like, single family or condo, duplex, triplex kind of thing. And it's also like in terms of building partnerships, because like eventually getting access to that capital is not easy. And if you have a case study that you can show and talk about to your friends and your family and everybody around you, by the time you've done one or two of those, everybody's like, it's like so-and-so doing their next deal. And I hear like, she just made 50K on this thing. Like, that's my yearly salary. What can I do to get into that? Right. So
Yeah, and I think a lot of that has to do with knowing who you are and what you want to operate with, right? And usually I tell everyone when they're creating a plan, I don't care if it's a business, whatever it is, you need to know who you are and what you want to do and be involved with, and then like what you don't want to do, right? And that's going to kind of help you align with what type of property, how much, etc. You talked about it. You fell into real estate, into the property management side because happen chance, right? But others have to overcome that, right?
yeah.
A lot of investors don't want to go change a toilet out, fix a wall. They don't want to. They're going to hire that out. But I see it a lot when we're vetting out deals is they don't put that into their numbers at all, right? They do not put that as an operating expense, because if you went and did it personally, yeah, it's going to be a lot cheaper than hiring someone out. What do you kind of align with people in obviously you have a property management business, so obviously you're going to lean that way, but what would you tell someone going into it, their first couple, what's a very good route for them? Now, obviously, you're in Canada, we're US, and it's totally different in terms of pricing, but it's still fundamentally the same.
Yeah, no, and that, manager, not manager question is like really broadly similar across North America. In Europe, it's a little bit different, but like here in North America, it's like kind of a similar ecosystem. And like, it's funny because even though I am a property manager and like, actually that's my secret sauce, right? Like I self-manage more portfolios in Montreal, half is in a submarket a couple hours away. So I have outsourced some of the management in that submarket because it's just not realistic to send my team out there, but I have kept all the admin on my property management platform. And so the tenants, I still communicate with the tenants. I still do the rent collection automatically. And like, I guess as much as possible, if I had advice, is that at least initially, the more connected you are to it, the better it's going to be for you. And like, take it as a learning experience for sure. If you get up to 200-300 units, like your involvement is not going to be the same as it is when you have 2 homes, right? But like, the places where I've really seen people like get screwed, sadly, is like if they're too disconnected from the property, especially initially when they don't even know what the checks and balances are. And so like I would say if you do have to hire a manager, like I like to call it a hybrid model, where like I have all the leases are saved in my Google Drive, and then the person has to like save the files according to how I want them to be saved. And if I have like an automatic rent collection system, like I can set that up myself. I don't need to be dependent on the property manager. And like the extent to which you can also have the tenants reach out to you if they're dissatisfied with something, because like if their maintenance things are not getting attention, they want to talk to someone, so they will call you. And like, in that submarket, I actually initially started working with a manager who was a real crook, and it was like partly because he collected rents from the tenants and then didn't deposit them in the account. And then the tenant was like, why is he trying to collect my money twice? And da da da. And so like, it was because I was doing that double checking that I caught it much faster.
Yeah, and that's the shit we always hear about, like the slumlords and all of those things. And usually it goes back to the landlord, but the management team is where the money usually flows. And I'm a huge proponent on nowadays, it's 2024. Like you can collect rents pretty easily nowadays. It's not always checks, it's not cash, it's not you're going to the Dropbox all the time. And so there's a lot that I think has taken away from property management that someone can do relatively easy, right? As long as you have the right softwares and you understand what you're doing, than opposed to back in the old days, right? Old days I'm talking about like that. So it's not like we're aging ourselves too much, but when it comes to picking and saying, okay, I'm taking this step forward, right? Lending's a different conversation that we could have at a different time, but it's like, okay, hey, I want to do the single fam. I want to do this duplex, triplex, quadplex, whatever I want to do. How do you look at properties? Now, everyone's different, but like, how do you go to look at one if you were to do it right now and be like, I want to look at this. I need this. I need this.
Yeah. So, I mean, again, I think this really depends on your business model, and like I mentioned earlier on, like I'm really a property manager. I have construction guys, but like I'm not somebody who loves to do a gut or and rebuild, or like someone who loves to make stuff pretty. Like I pretty much, focus on D level properties, and I'm going to manage them up to a C minus. And so like I'm looking for, some of those listing anomalies where like, us at the point in our market right now, we have a lot of succession. So there's like a lot of unprofessional older landlords whose kids have inherited, or they're kind of like done with the business. And so they're listing with their broker who's of their vintage and has not followed the rent and the price progressions. And so like you see these things, and like the rents are always not market because they haven't done their yearly increases. And so like I can at this point spot a property that hasn't been under professional management. And then like, to me, that's just like catnip, right? Like I really want to go see it right away. And then I want to see how badly has this place been managed. And like, it seems like in my market, there's enough of that, and enough of a lack of professionalism that there are like major opportunities like that around. So, for my business model, like that's the kind of thing that really attracts me. Whereas like, I have a colleague who shares my office, and he prefers to do like, not exactly flips, but like, really doing significant renovations or like value adds by adding a unit or adding a floor. And like, for me, I'm like, this just turns me off. Like I want nothing to do with that. It's way too much work.
Oh,
So
absolutely. Now, I luckily enough, one of my clients is an interior designer. So I like, if I'm ever going to do that, I just let her run with it. But let's talk about business models in real estate, right? You had talked about going from D's to C's, and then probably selling to someone who wants to take it from a C to a B or an A. What does that all mean? What the hell does all this mean? Those are letters and numbers and stuff. What does that mean, and what type of different business models are there?
I mean, there's like so many different kind of business models, right? Like short-term rental, medium-term rental, long-term rental, like just to say a few as far as like rental strategies go. Then there's like obviously how much you want to involve yourself in development and construction. And that goes all the way from complete development where you buy a piece of land to more of what I do, which is like basically I call it lipstick, right? Like I have somebody move out and then like I always say the highest ROI I get is on paint. And so like that's kind of like really the minimal thing. But for my tenant base and like the areas that I invest in, like you also have to think in Canada, like we don't really have guns. And so like our C or like D level properties, like I can walk in there even at night and it's not dangerous. So like you can't completely cookie cutter that onto what it would be like in the US. But like wherever those things are, like if you're able to raise the standard of a property, either by being less tolerant of certain things, by making small cosmetic repairs, and like probably, your listeners have heard of the like broken window phenomenon, which is that like sociologists actually discovered that if there were vacant buildings and the windows were broken, that like encouraged people to do graffiti and criminal activity rose and like all kinds of stuff. And just the fact that a place looks neat and well taken care of, you're automatically upping the standard of behavior that gravitates around there, as opposed to like, garbage being all over the place and like, pests and other various different kinds of things. So just by like, bringing a little bit of conscientiousness into there, you'd be surprised. You can often like stimulate some of the good tenants to just have a bit more civic involvement in what they're doing. And then if the trash cans are like, overflowing, well, someone will just like clean it up, right? Before the janitor can come, just because they don't like it. And people don't like that, generally speaking.
Yeah. And we're all humans, right? We're like, human nature is not to live in trash. It's just, it isn't. I don't care what anyone says. We're not born that way. And so we naturally want to take care of things. And that gets me to my point of like true wealth. My definition of true wealth is living a happy life joyfully, giving back to others, and using money as a tool. And our conversation today, and everyone who's listening that's listened before, common theme with all my guests, and that is we don't talk about the money. Like we're not talking about dollars. You're not talking about, oh, I did this to make $1 billion, $100 million. You're talking about like the fundamentals of it. And truly what you're talking about is helping others have a place to live or whatever it is, right? And that is true wealth. And I want you to talk about that part of it, because being a landlord or an investor, what you're doing is you're providing a place, a home for somebody. And as humans, we just want to live somewhere. We want to have a home that we can create our own. So talk to us and tell us about how that makes you feel and how big of a piece of your whole career is based upon that you care for others and you.
Total mom brain going on today. I left something on the stove and I was like, I need to go turn it
So
off now.
speaking of that, we had, I was making muffins for the week because the boys always want muffins. And we, on Sunday, like our oldest had a flag football game. I'm the coach. It was like 5 minutes before we left. I'm like, okay, they're not quite done. Right before you leave, just take them out of the oven. You'll be fine. We get back from the flag football game and our youngest goes, what's that burning? And I go, oh, shit. And my oldest is like, are those charred? I'm like, yeah, they look like hockey pucks. They are black. Okay. Get over it. So I feel you on that.
All right, I won't feel bad then. But okay, I like memorized exactly where we picked up, so I'll just jump right into it. So true wealth. I have two things to say about that. I think, housing, it's a very difficult thing right now because I think, landlords get a lot of bad press. And, for a certain percentage of my tenants, like they're not necessarily happy when Terrie takes over because, like I have zero tolerance management practices. And that means that I expect things to be cleaner. I expect the rent to be paid on time. Like I have certain expectations that for whatever reason, the previous landlord maybe wasn't on board with. And so for people who are, maybe less willing or able to take that on, like, it's sometimes things don't end nicely. And like, I think we're also in a time period where like I'm seeing a lot of addictions and a lot of like mental health problems. And so I think that's really where, it's difficult because like the state has kind of, and families have kind of stepped out of that support role And as a result, there's, a lot of people who are living on their own and they're actually not able to behave autonomously, right? Like if it's living in garbage or pest control or like, I had to evict a woman back in July who tried to break and enter into her neighbor, right? She like at 4 a.m. ripped off her neighbor's window. And then that's not even talking about how she like trashed her own place. And so like, and from what I know now, she's living in her car, right? But like that's actually a real social issue that exists. And so like, it's a bit difficult because like on the one hand, you are like upping the level of a certain asset, which means that 80% of the residents there are going to be happy because now all of a sudden those problem people are not there. They don't have to sleep with one eye open. The garbage is picked up. And so like you're increasing the quality of life for some people, but for, I guess the more like troublesome elements or whatever, it's, not necessarily a good day of the week for them. But I would say for me, where I get like the most satisfaction out of what I do is, I love growth. And at this point, what I do in real estate, like it's not so much about the dollars. It's more about, growing my own portfolio or for partners. As the bigger things get, the more interesting they are to me. Then in terms of my coaching students, like to help people on the path to growth. And there's nothing more exciting than when somebody comes into the ecosystem and they've been doing their W-2 for like 10, 15 years and they're kind of shut down and they've accepted that like, I'm never going to be wealthy, like between taxes and all my expenses, like I'm always going to be just getting by. And then all of a sudden there's this like whole world that opens up to them on not only can I like generate way more money than I thought, but now I can actually get some freedom. I can get some security for my family and I can feel like I'm growing and I'm like involved in something that's beyond just showing up for work every day and sort of going through a routine. In talking about like true wealth and what like human beings really need and respond to, like I always say there's kind of these two energies, right? Like there's this security based energy where like we just want to hold on to what we have. And that leads us to shut down and to be small and to like get into all these like little fights with the people around us because we're fighting for a bigger piece of pie. Whereas like if you are able to like orient yourself more towards growth, then that is just has positive effects for your relationships, for your mood, for your financial circumstances. Like it's just such a positive change. And I think that for a lot of people, when they get into real estate, like that's actually what's happening. Sure, you're going to make more money, but it's a vehicle for growth. And it's a thing that you can just you can keep on getting bigger and bigger and bigger. Right. And so you're always able to push yourself and always able to find something new in the same way that like if you were an athlete, you can always like push that bar a little bit higher. So
Yeah. And being a former athlete myself, we use this connotation all the time, specifically when we're training, because ultimately when you're growing, you're training, you're trying to get better. And if you can always try to get better, then you're going to be successful at some point down the road. We don't know when, we don't know what happens, but if you're continuing to grow and move forward, good things will happen. Problem is when you plateau or scarcity mindset or go into your shell. When you start to plateau or go into your shell, that's when you start to fail. That's when you start losing because everything else is moving forward. And that's ultimately what it comes down to. So I love your analogy. I use abundance instead of growth and use scarcity. They're all the same, connotation, the same words.
yeah.
And I love how you use it. And it's very important for people to know that specific.
Yeah. And I like, look, I would say one other, great thing. So I do like, I had a, a sports background before I was in combat sports for a long time. And, the awesome thing about real estate is like, there's not just one winner, right? Like if you're playing sports or like, for me, I was like competing at a, an international level. And so like, there's only one girl who gets to be on the top of the podium and like, 20, like 19 times out of 20, it's not going to be you. Even if one day you're going to win, you're going to have a lot of losses before you get there. But real estate's not like that. The thing is like every little win counts and it's not like there's a podium that only one person gets to stand on top of. It's like, no, you get to, and if you join a sort of some kind of a community, like you get to be part of a group of people who like cares about this and who can help you celebrate all of those wins. And like, that's kind of what we've tried to do in our coaching program is to really also, we have monthly networkings and stuff like that, where we try to create some of that vehicle for celebrating the milestones and like having people receive some of that recognition that like if you're just doing it in your basement, it's just not as much fun. So
That's fair. I love that. I love that. All right. As we get to the end, I always ask my guests for one question to answer. And that is, what is one thing that you can leave our audience with that will help them take that next step forward? in both their wealth journey and just their growth journey.
Yeah, sure. I mean, like I can provide you, I guess, with a couple of resources. So, like, I actually have a podcast myself called the Real Escape Investing Podcast. And so, like, that obviously allows me to delve into a little bit more detail of like the things that I touched on. So, if you want to go check that out, that's like, wherever podcasts are available. And then I also wrote a book called Mindful Landlord, which kind of expands a little bit on in real estate. We talk about like mindset a lot. And I don't love that. I think that mindfulness is actually a better methodology to use your consciousness in a way that's going to support you as opposed to detracting from you. And like in mentioning, the fear a little bit before, like that is something that's borrowed directly from mindfulness. And as you become able to understand the difference between the different levels of your mind, so for example, your thinking mind and your emotions, or else what we call the watcher or pure presence, and you begin to identify more with that as opposed to the radio talking all the time, that would be mindfulness methodology. And so like, whether or not you check out my book, Mindful Landlord, it's available on Amazon. That's kind of connecting the dots between real estate and mindfulness. But like, if you have time to do a little detour and you're not familiar with mindfulness, go ahead and check that out. I actually have an episode on my podcast that's specifically on mindfulness. Yeah, that would be my evangelizing moment.
Love it. I love it. And like always, everybody, we ask one thing, and that is to not just to like, share, and comment because of algorithm. I don't really give a shit about that. Is because we want to help you. The guests I bring on, we want to help, right? We're here to help you grow wherever you're at, whether it's my services, Terrie's services, or any of our other guests. So do comment, reach out, DM us, do whatever, because we're here to help as much as possible. Terrie, thanks for being on. And I would almost guarantee we're going to get you back on and go a lot more granular into real estate in general.
All right. Well, thank you so much for having me on. It's been really fun. You're a great interviewer. Love the angle, and I love the no BS. I think that's it's really good for people to have some straight talk that's not flying too high and that, keeps it real. So thanks for putting that out there, and thanks for giving me the opportunity.
Absolutely. Anytime.
Was sponsored by Black Mammoth. Any awards, rankings, or recognition by unaffiliated third parties or publications are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Black Mammoth. Information regarding specific awards, rankings, or recognitions is available on the Black Mammoth website, www.blackmammoth.com. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to affect or attempt to affect transactions and securities or the rendering of personalized investment advice due to various factors, including changing market conditions. The information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up-to-date, Black Mammoth do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature and is provided for informational purposes only and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Past performance is not indicative of future results.